You wake to numbers, 1,000 tiny pulses before coffee. Prices blink, gaps appear like breath. You feel a rhythm, you think, this is random. Then you remember, nothing in markets is purely noise, not if you listen, not if you learn the cadence, short breaths, quick beats. You learn to hear the pattern beneath the chaos. You map time, you map reaction, you track the big hands first. Institutions, algos, news cycles, they move the tides. You follow the tide, not the foam. Your notebook becomes a battlefield map. Tickers are trenches, volume is artillery. Price is ground lost or gained. You commit one rule, probability over certainty. You cannot control the market. You can predict odds. Level 2. You build your model like a sharpshooter builds a rifle. Parts matter, precision matters. Data is your metal. Clean it, scrub it, remove bias. You don't trust what you want to be true. You test what is actually true. You learn time frames, micro, macro, ultra. Each tells a different truth. You never mix them carelessly. You overlay signals, trend, momentum, liquidity, news impact, sentiment. Each alone lies, together they triangulate. You backtest until your fingers cramp. Simulate stress, bend the model. If it snaps, it's not ready. You build stop rules like safety catches. You build sizing like armor. You respect drawdown like fire. You are scientific and ruthless. Level 3. You recognize patterns like a detective recognizes footsteps. Head and shoulders, breakouts, mean reversion, flash crashes. Not as names, but as behaviors. You watch how price behaves at certain levels, how it hesitates, how it surges, how orders stack silently. Stories matter. A tweet can push a whole sector. An earnings whisper can yank volumes out of a thin tape. You account for market actors, retail panics, prop shops hunt stops, HFTs scalp and quote. Institutions execute over time. You model their motives. You turn motives into probabilities. You create scenarios, best, base, worst. Each scenario gets a plan. Level 4. You are not predicting a single number. You are predicting probability distributions. Will it go up? Maybe. How likely? What's the payout? What's the cost? That is your calculus. You size every position to the edge of your comfort. You know your tolerance like a second skin. When the edge of the map lights up, you don't rush. You verify, cross-check, wait for confluence. When confluence arrives, you move fast. Execution is a muscle, discipline is the tendon. You use options, futures, swaps, cash, whatever sculpts risk to your will. You think in asymmetry, small known loss, large unknown gain. You trade in probabilities, you harvest edges, you accept that edges lose sometimes. That does not break you. Level 5. You predict not by being right always, but by managing the narrative when you're wrong. Stop losses are not shame, they are tuition. You pay small to learn large. You analyze each loss like a coroner, cause, contributing factors, prevention. You adjust the model, not swinging wildly. Small, methodical updates. You keep a trade journal, date, thesis, entry, exit, why you believed, why you were wrong. You build a ritual, pre-market scan, midday pulse, close of day debrief. These are your anchors. You train under simulated storms. You practice panic without suffering the cost. You gain muscle memory. Level 6. You watch the macro like a chess player watches the board. Interest rates, credit spreads, liquidity, geopolitics, sentiment. Each moves multiple pieces. You watch correlation breakouts. Uncorrelated assets suddenly march together. That signals shifting regimes. You prepare for regime change. Your model adapts. You don't cling to old signals after the environment flips. You hedge like a country hedges crops, not always, but when the forecast demands it, you act without hesitation. You diversify edges. Too much faith in one signal kills longevity. You keep capital alive. Life in markets is a long game. Level 7. You understand the ethical edge. Prediction is power. Power changes incentives. You avoid front-running yourself. You avoid information traps. You respect laws and the market's trust. You know the story you sell yourself matters. Greed is a fog. Ego is a blindfold. Humility keeps your edge sharp. You measure success in survivorship and compounding, not in one glorious moonshot. You scale slowly. Small wins widen the runway. You become a steward of capital, for your family, for your partners, for your future. Finale. Now you stand at a console. Screens glow. Data flows like a river at night. You have built a method, you have practiced, you have doctrine and rules. Prediction is not prophecy, it's preparation. You reduce uncertainty into manageable bets. You trade probabilities, you manage losses. You scale wins. You move when the patterns converge and you hold when they don't. You are not omniscient, you are observant, disciplined, ready. You predict not because you are certain, but because you respect the odds more than fear. You breathe, you watch, you act. This is how you turn noise into signal. This is how you turn markets into opportunity. Lights shift, the bell rings, you place your order. Roll credits, strategy, discipline, survival.